Hey, Tyler, the barriers to stock trading are getting lower, and small investors are making the most of it. In the past few weeks, we've seen traders piling into volatile names like Tesla and Virgin Galactic. One key metric showing trading activity, daily average revenue trades, so-called DARTs at Charles Schwab, Ameritrade, and E-Trade jumped more than 30% from December to January, month over month. A few factors driving that boom in trading. First, it's free. All of the major brokerage firms have followed Robinhood with zero commissions. That kicked off a wave of consolidation we're seeing, with Morgan Stanley this week buying E-Trade and Schwab buying TD Ameritrade. Analysts I spoke to say these firms are taking a page out of Amazon's playbook. They want to be a one-stop shop for finance. By offering stock trading, customers don't have to ever really leave their app. And finally, fractional trading. Fintech startups and more recently, Charles Schwab have started offering the option to buy part of a stock for as little as $1. Guys?
All right, that would do it, Kate. Add it all up. We appreciate it, Kate Rooney. We've seen those retail investors help fuel some parabolic moves this year. The biggest gains, look at Virgin Galactic and Tesla. 200%, 115% higher this year. Now, it has been a volatile week. We pointed out the NASDAQ today. Them and the growth stocks getting hit the hardest. Can the speculative surge hold up in the long term? Let's ask Gene Munster. He's Loup Ventures founder. Gene, it's good to see you. And how would you connect kind of these high-flying stocks back to the tech-heavy parts of the market that have been working?
Well, I think what's important is to first distinguish what causes these epic moves. And essentially, you have a story that is largely misunderstood and then becomes understood by a handful of investors that believe that a company has a 10-year head start of what is an undeniable truth. When you do that, you have other investors start to pile in, retail investors that really move these stocks much higher. But I think at the end of the day, the most important part about the momentum and what drives this is it truly around something that's going to be transformational? And I think when you think about what's going on with Tesla, and to a much lesser extent, Virgin Galactic, these are things that are 100 years, 80 years, that there's been a standard, and that is dramatically changing. So I think there's also an important distinction about what is a quality momentum stock versus one that can be a trap. And it is a distinction as clear as winter and summer. And specifically is if you look at Bitcoin, for example, that back in late 2017, up 700% over 6 months. A lot of retail investors poured into that. But the difference there, distinguished between a quality momentum stock versus one that is more speculative, is that these stories that have staying power ultimately have a competitive advantage. Bitcoin does not have a competitive advantage. It played into a broader theme around blockchain. When you think about Tesla, there is a long-term competitive advantage. When you think about Virgin Galactic, it's a little bit debatable whether they have a long-term competitive advantage. But the simple take is investors need to be keenly aware of that distinction.
Yeah, I thought you were going to say that the distinction between the good momentum plays and the less good momentum plays was the presence of the retail investor in the first place, and that you could probably isolate the troublesome ones by looking at the ones where the recent trading has been heavily concentrated in the hands of retail investors versus institutionals.
Tyler, I think that definitely plays into it. I think that they can add that extra piece to it. If you just think more broadly, institutional retail investors call it 20-25% of the market, so they can definitely play an edge in that. And I think the Bitcoin example is most appropriate. My hope is that retail investors will ultimately take a step back and answer that simple question about the defensibility going into these massive themes.
Yeah, it really is kind of the foam on the beer, I guess. I don't mean to be dark here, but when you talk about sustainable advantage that a company might have, if I were to look at some of the space companies, their sustainable advantage could disappear in a tragic instant.
Yes, there is. This is a very lumpy industry to get into for a lot of reasons. I think when you look at the core, what's the core insight around Virgin Galactic is the turbine engine really became commercialized in 1952. British Airways, a version of British Airways, was the first company to do that. There hasn't been any innovation around really the propulsion around consumers since then. the speed that they move at which. And so I think that when you think about Virgin Galactic, there are not a lot of companies, probably 4 or 5, that are ultimately working on these propulsion systems. And so, yes, you will have dramatic moves based on the success or failure of launches in this kind of learning period. But ultimately is that there are ways that we can move around much more efficiently, and we're going to be entering that over the next decade.
Gene, can we zoom out before we let you go and talk about the biggest names, Facebook, Amazon especially, people are asking about today, asking to explain the price action. Bond yields are down. That typically has supported these stocks, but not today.
Yeah, I think what investors should ultimately ask when you're in these big, well-known growth companies is which one of them have advantages, long-term advantages around undeniable truths. And when I think about Facebook and Netflix, I think those companies do not have this competitive advantage around the truth around streaming or social. I think that they become more dangerous plays. But on the other hand, if you think about a company like Apple, the combination of hardware, software, and services, Google, Tesla, I think those are ones that, despite what happens in the noise of yields bouncing around, investors for the long term can sit tight and rest well in those undeniable truths.